The whole game is, if you're in a secular bull market, it's don't lose control of your tokens. Own your Bitcoin all the way through, and you have a risk of screwing that up for the extra 5% income or 10% income. In Ethereum, very different world because you're staking. The only two assets that outperform the debasement of currency is the NASDAQ and crypto. This has been a persistent trend that is observable and measurable. So this is not a speculative asset. What it is a Metcalfe's law adoption model. Bitcoin is the adoption of, let's say, a money or collateral layer, like gold, digital gold we'll call it, while the rest of crypto is the new rails for the internet. So it's a technological investment. It is growing at twice the speed of the internet in terms of adoption and has been since the first 5 million IP addresses for the internet and the first 5 million wallets. Twice the speed of the internet makes it the fastest adoption of any technology the world has ever seen, aside from AI now, which is now outpacing it.
The cryptocurrency market is on the cusp of a radical shift. Ethereum's recent all-time high of $4,889 and Raoul Pal's breakout of the total 3-channel indicate a structural reallocation of capital away from Bitcoin and toward high-utility altcoins. This shift, driven by favorable macroeconomic factors and technical confirmation, positions 2026 as a pivotal year for investors seeking exposure to the next phase of crypto growth. The Federal Reserve's shift to a more dovish stance, discussed at Jackson Hole 2025, has reignited demand for risk assets. With interest rate cuts expected by Q3 2025, capital is flowing into Ethereum and altcoins at an unprecedented pace. U.S. spot Ethereum ETFs, such as BlackRock's ETH-A, attracted $10.8 billion in Q2 25 alone, outperforming Bitcoin ETFs. Ethereum's price action in 2025 has been a masterpiece of technical analysis. The all-time high of $4,889 confirmed in August 2025 followed a rising wedge pattern on the weekly chart, a pattern Raoul Pal called one of the most powerful in the cryptocurrency industry. This breakout, supported by a 234% price increase from the 2024 lows, has dissipated bearish sentiment. The total 3-channel, a 3-year consolidation pattern, has been definitely broken. Ethereum's Relative Strength Index, RSI, above 70 and MACD hitting yearly highs confirm this dynamic. The confluence of macroeconomic and technical factors suggests that 2026 will be the year of altcoin season. Ethereum's dominance in DeFi, 65% TVL, and stablecoins, 50% of market cap, lays the groundwork for altcoin growth. Prediction markets now assign an 85% probability that Ethereum will surpass $5,000 by the end of the year, with Fibonacci extensions pointing to $5,200 and $6,000 as potential targets. Furthermore, Ethereum's Denkun upgrade, which reduces gas fees by 53% and enables 4,000 TPS, has made it the preferred settlement layer for tokenized assets. According to Raoul Pal, this is what makes Ethereum different from Bitcoin. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now let's get back to Raoul Pal's view on Solana and the overall crypto market.
What changes in 20 years' time? Well, in 20 years' time, we're in a very different world. The economic engine is driven by robots and infinite intelligence. We don't know how the economic machine works. We don't even know what the value of money is when we go into that world. So I've talked about this before, the economic singularity, past 2030, the economic model breaks down. So the economy generally grows by a measure of population growth, how many people are in the economy, or coming into the economy or being born, productivity, how much output they create, and then debt growth is the other lever. What's happened here is the population of the entire Western world, plus Japan, plus China, has been aging. So the rate of change of population growth is shrinking. So you've got this slowing economy. GDP growth has been slowing over time. Productivity, old people make less things. So that's the system we're in, and this is why we're printing money to service this debt, because we're not generating enough output in the economy. But after 2030, this population part changes. We've got infinite artificial humans.
According to Raoul Pal, we are witnessing a repeat of history in the cryptocurrency markets. with potentially significant implications for the duration of the current bull cycle. This analysis suggests that the promising upward trajectory we have observed may well be just the beginning, potentially delaying the peak much longer than initially anticipated. The current cryptocurrency market cycle bears an eerily similar resemblance to the now legendary 2017 bull cycle. This comparison is not made lightly. 2017 was a period of explosive growth that captured global attention and propelled Bitcoin and altcoins to popularity. Raoul Pal's observation is not based solely on price action, although chart patterns can provide clues. One of the main reasons behind Raoul Pal's extensive cryptocurrency predictions is his own business cycle score. This indicator, which assesses the health and phase of the global economy, currently sits below 50. According to Pal, when this score is low, it typically takes a considerable amount of time to increase significantly. This slow progression of the business cycle score suggests that the overall economic environment remains favorable for risky assets like cryptocurrencies for a longer period than typical cycles. A weaker dollar can make dollar-denominated assets relatively less attractive and encourage investors to turn to alternatives perceived as having stable value or growth potential. The combination of a sluggish economic cycle and the favorable backdrop created by the weakening dollar led Raoul Pal to establish his precise timeline, an extension of the cryptocurrency bull market into the second quarter of 2026. This is a remarkable prediction, as many previous analyses based on historical Bitcoin halving cycles anticipated a peak in late 2024 or 2025. This perspective suggests that opportunities in the cryptocurrency market cycle might not expire as quickly as some models predict. However, it also underscores the importance of understanding the macroeconomic forces at play and approaching the market with a long-term perspective and a sound risk management strategy. Pal predicts that Ethereum will overtake Bitcoin, with Solana and Sui leading the way. Institutional investors are flocking to Ethereum. By mid-2025, $40 billion has been staked in Ethereum, and BlackRock's ETH-A ETF saw inflows of $9.4 billion, far surpassing Bitcoin's $548 million. Bitmine staked 1.52 million ETH, $6.6 billion, and SharpLink Gaming added 740,760 Ethereum, $3.2 billion. Nearly 30% of ETH supply is locked, reducing liquidity and driving demand. Ethereum has many strengths. The Denkun upgrade reduced Layer 2 fees by 95%, generating 30 million daily transactions. Ethereum is becoming faster, cheaper, and more attractive to both users and institutions. Ethereum may be grabbing headlines, but Solana and Sui are vying for attention. Solana, which has climbed back above $200, has outperformed Ethereum in recent days.